Follow the rules when deducting home businesses. In this episode, I'm going to address the question head on. Can you run a business out of your house? Now, there's a simple answer to this, but I'm going to go deeper that will help you understand how you can tax deduct all of the expenses related to running a business out of your home. So my name is Doug Andrew, and I've been a tax minimization specialist for more than 46 years. I've had many clients who are business owners, many of which run businesses out of their home, in addition to even having commercial office space or warehouse space, just like me. And so when people ask the question, can you run a business out of your house? Of course you can. I'm assuming what you're really asking is, can you run a business out of your house and deduct it? Be able to take advantage of tax deductions? Yes, you can, but it's imperative that you follow the rules. And I'm going to give you some horror stories of people who thought they were following the rules and they got disallowed when they were audited by the IRS. And I'm going to show you how I cover myself when I deduct the portion of my house that I use for my business. So first of all, there are some home occupation businesses that it's pretty much a no-brainer that you can deduct the expenses related to the square footage that you're allocated in your home for that business, such as a barbershop, a hair salon, or what have you. But there's a lot of people who run their businesses out of their home, and they need to allocate or designate the space that is dedicated to running that business. So the basic rules are that if you're going to deduct a portion of the cost of the house, let's say it's the mortgage or the space, or you allocate what part you're renting for your business, you need to allocate that amount of square footage, and you need to make absolutely sure that you have none of your personal effects in that area. So let me give you a horror story. I had a client years ago that had been deducting his office in his home, which most people can do. And the IRS challenged him on what he was deducting. Well, he had calculated it correctly based upon the percent of utilities and the lights and the heat and the air conditioning that was related to that portion of it, because he calculated the percentage of that office that he used in his business. Well, the IRS actually came for the audit to his house, and they said, show us the area you're using. They walked in and opened the closet that he had included in the square footage, and there was a sewing machine, his wife's sewing machine. And they asked, is this sewing machine used in your business? He goes, oh no, that's just my wife's sewing machine. And they disallowed it. You cannot have that space being used for anything else. And so you make sure that you calculate the square footage and that you have your business doing that. Now, how do you overcome that? Well, with my businesses, when I file the Articles of Incorporation or the LLC, and we talk about the organization and the purpose, I make the purpose so broad that anything that we do that relates directly or indirectly to that business will justify having whatever is in that space. And so I also make sure that my wife is either one of the members of the LLC or she is the sole member of the LLC. And you have to dot your I's and cross your T's. And whoever is on that and whatever the business purpose is must envelop the usage for what they find in that space. And so if you calculate that and you have actually allocated an area of your home, you can use that and deduct the appropriate costs that are associated with that. Let me talk about how many types of deductions that a business owner can take, whether you run a business out of your home or not. So I have counseled many clients who were dabbling in starting their own business to actually get a business entity, register that with the state, and make sure you file either a Schedule C on your 1040 or an LLC, because I'd recommend most business owners set up a limited liability company for their business, or maybe even a corporation. There's lots of reasons for that, for liability protection and tax purposes. But once you have the legitimate entity and you have the broad description of what you can do in order to earn income or bring in revenue for that business, any expenses related to earning that revenue can be deducted. And so my CPA years ago, I had him condense on one sheet of paper, and he came up with a listing of over 210 different things that you can deduct on your tax return you file for your business. And it includes all kinds of expenses, even travel expenses and entertainment and meals under certain conditions and what have you, and seminars. And this is addressed in other YouTube videos, and I would encourage you subscribe to this channel on how you can even tax deduct some of your vacation expenses if you hold business meetings and do it the way the IRS says. And it can include all kinds of things while you're having a family vacation if you're holding business meetings in that setting. And that's why many corporations can tax deduct the conventions they hold, because they hold business meetings for at least an average of 90 minutes a day. You can do that too with your family if your family is all involved in the business. And all of our children have always had their own business entities where they filed a tax return and were able to tax deduct their portion of those expenses that are legitimate on their vacations. And I've been audited numerous times and they've never been thrown out. There's over 210 on this one sheet of paper. And so what you need to do is look at all of the expenses that qualify to be deductible as a business. And you can search online and see these. But once you understand that and you do it the way the IRS says, whether you run a business without being in your home or whether you include it in your home, then you can qualify for deductible expenses as it relates to any money you are spending to make money. Technically, simply is deductible. You can justify it, but I would recommend you talk to your CPA or tax attorney to make sure you're doing it the right way in case you get audited. So if this is intriguing you, I'm a tax minimization specialist, and I've had many clients get audited through the years, and they came through with those audits with flying colors. If you want to learn more about how to redirect otherwise payable taxes to causes you support, be sure and subscribe to this channel and search other tax strategies, not just for business owners, but for any situation. And you'll learn things like why I've never owned an IRA or 401k, and I never will. I've never owned a Roth and never will, because there are tax advantage strategies that are far superior to those vehicles. So subscribe, check out this video next, and search, enter questions, and I will continue to post content to answer questions just like this one.